Hello, welcome to the Grow Your Wealthy Mindset podcast, where it is all about helping amazing physicians just like you create a wealthy life free from burnout and with the financial security to practice medicine on your own terms. I'm your host, Dr. Elisa Zhang. Hello, and welcome back to the Grow Your Wealthy Mindset podcast. Each year, the IRS announces adjustments to tax brackets and contribution amounts to tax-advantaged accounts in order to keep up with inflation. Today's episode will review the changes that's happening for 2025. I'll be rambling off a lot of numbers, which I know can be hard to remember. The show notes list the new contribution limits for 2025 so that you can see them there easily. I've also included a link to the IRS website, which lists the tax bracket changes. The IRS announced the federal income tax bracket increase actually back last October. They raised each income threshold by roughly 2.8% for 2025 compared to the 2024 marginal tax rates. This was less of an increase than what happened in 2024, where the brackets raised about 5.4%, which indicates that the IRS sees that inflation has decreased in 2024 compared to 2023. The standard deduction has increased by $400 in 2025 to $15,000 for single filers and increased by $800 to $30,000 for married couples filing jointly. The Social Security taxable income threshold has also increased. Social Security tax now applies to the first $176,100 of income, which is up from $168,600 in 2024. This means paying an extra $465 in 2025 to Social Security taxes for anyone who has a salary above $176,100. The contributions to retirement accounts has also increased. Employee 401k, 403b, and 457 plan contribution limits have increased by $500 from $23,000 in 2024 to $23,500 in 2025. If you are age 50 to 59 or 64 or older, you are eligible for an additional $7,500 in catch-up contributions for a total contribution amount of $31,000 in 2025. Starting in 2025, people aged 60 to 63 can contribute an additional $11,250 in catch-up contributions for a total contribution of $34,750 to their retirement accounts. This is something new for 2025, and it's kind of weird and confusing. It's from Secure 2.0 Act, which introduced a super catch-up contribution specifically for individuals between the ages of 60 and 63 in order to help workers boost their retirement savings. Why 60 to 63 and not just 60 and older? I have no idea, but it certainly does add a little bit more complexity and make it harder to remember. These contribution limits are the same for both the traditional type and the Roth type for 401k and 403b accounts. There's no Roth version of the 457 plan. If you do have access to both Roth and traditional retirement accounts, for example, your employer offers both a Roth 401k and a traditional 401k, then you can contribute to both of those accounts, but your total employee contribution is still limited across all accounts. If you are under age 50, you can put $23,500 in contributions across all your 401k accounts, no matter how many different 401k accounts you have, and no matter if they're traditional or Roth. If you change jobs and have a 401k with a new employer, but already contributed to your 401k with your old employer, your contribution limit still applies to that new account, but you still can contribute up to the maximum for your age across all your accounts. Employers can contribute to your retirement account as well. So if you have your own private practice or you have 1099 income as an independent contractor, you can contribute to your retirement account from the employer side as well. The max amount of employer contributions is $47,500 or 25% of the employee's compensation, whichever is less. There is a salary cap of $350,000 for employer contributions. And this includes if you are your own employer, i.e. you're self-employed. This salary cap did increase $5,000 from the value it was in 2024 when it was $345,000. You can still contribute the maximum amount of employee contribution. Of course, when you have your own business, the taxes can be somewhat complex depending if you're doing it as a pass-through LLC or you've established an S Corp. So you'll want to talk to your CPA regarding what you can do with contributions to your tax advantage retirement accounts through your company. While there was an increase in contribution limits for 401ks and 403bs, the contribution limits for IRAs did not change for 2025. That means that the contribution amount for 2025 to your IRA, your Roth IRA, or hopefully you're doing a backdoor Roth IRA, is $7,000 if you're under age 50 and $8,000 if you're 50 or older and qualify for the $1,000 extra catch-up contribution. Defined benefit plans have a contribution limit of $280,000 for 2025, which is up $5,000 from the 2024 limit of $275,000. The limit for defined contribution plans has increased to $70,000, up $1,000 from the $69,000 limit in 2024. Health saving accounts limits have also increased in 2025. Individuals can now contribute $4,300, up from $4,150 in 2024. And families can contribute $8,550, which is up from $8,300. There's also an additional $1,000 catch-up contribution for those 55 and older, which has not changed. Flexible spending accounts saw a really minimal increase from $3,200 in 2024 to $3,300 in 2025. Other notable increases is the increase in the annual gift exclusion, which is now $19,000 per recipient in 2025, up from $18,000 in 2024. The lifetime estate tax exemption has increased as well, from $13.6 million per individual in 2024 to $13.99 million in 2025. Again, as I mentioned earlier, the new 2025 contribution limits will be in the show notes, since I know it's difficult to remember any of these numbers. So thanks for sticking with me to the end of this episode. Hopefully this episode has made you aware of the changes for 2025 so that you can plan accordingly and make changes to your contributions for 2025. I hope you have a great 2025, and thank you so much for being a listener of the Grow Your Wealthy Mindset podcast. If you enjoyed this episode, I would love it if you could share it with your friends and colleagues. And now for the disclaimer. I am not a certified financial planner, accountant, or attorney, and nothing I say should be construed as professional investment, tax, or legal advice. This show is primarily for your education and entertainment. I am a physician, but I'm probably not your physician. So if you need any medical advice, please contact your own physician. Thank you.